What if I told you the next crypto mega trend? Not going to be meme coins. That ship is sailing, has sailed. They still make money. They're great. We all love meme coins. But what if the next big thing that you could still be early-ish to, real world assets, stocks, bonds, real estate, gold, everything on chain, all tokenized, all brought on chain. We're talking trillions in assets. This is where TradFi meets Web3, DeFi, crypto blockchain bullshit that could see $30 trillion by 2030. That's the estimate. This is setting up to be crypto's next big breakout sector. And like every good narrative in this market, it's a battle between the blockchains. In this video, we're talking about the leaders in this space versus the underdogs, which could have higher ROI in the space. By the way, I own some of the coins being discussed. Disclosures, as always, in the description. Let's start with the battle of the infrastructure. Chainlink versus Wormhole. Now, Chainlink is the OG Oracle, man, and they got their CCIP thing, man. They got the real-world data into blockchains, boom. And it's leading the RWA revolution. CCIP allows for all kinds of cross-chain transfers, all kinds of fun stuff, all kinds of real-world asset stuff. It's got the most developer activity among top real-world asset projects, and Chainlink's partner list already reads like a TradFi Hall of Fame. Working the global messaging protocol SWIFT, the biggest banks in the world like JP Morgan, Citi, USDTCC, which, in case you don't know, is one of the biggest clearinghouses in the world, does quadrillions a year in volume. It's insane. Clears every single US stock trade, even Google Cloud, allowing smart contracts to access giganormous volume of external data. Chainlink CCIP protocol, I mean, it stands for Cross-Chain Interoperability Protocol, is becoming the universal plug between TradFi and DeFi. So if you want every blockchain and every bank speaking the same damn language, they might be speaking Chainlink, and CCIP might be the translator for all of that. But it's the big daddy. You want something that's 1/20th the market cap of Chainlink? Wormhole. While Chainlink brings data on chain, Wormhole moves assets across chains, competing directly with Chainlink's CCIP. It's not just a bridge, it's the pipes of the multi-chain future. It's already being used by tokenized treasury companies. For example, we have BlackRock's BIDL, so it can operate natively on Ethereum, Solana, Avalanche, and more. Wormhole's at the middle of BlackRock's on-chain assets. Okay, so same asset, one liquidity pool, multiple chains. Wormhole gives tokenized assets a passport to travel anywhere they want, and it's not just BlackRock. Financial players are piling in, like Apollo's tokenized credit fund, Agora's AUSD yield-bearing stablecoin, and M0's treasury-backed M token. They are all using Wormhole to move billions on-chain with no fragmented liquidity and no middlemen. Just instant cross-chain movement of assets. Even layer ones like Solana and Sui are integrating Wormhole technology in order to attract more institutional TVL. And with over $1 billion in daily volume recorded on DeFi Llama, Wormhole's quietly becoming the RWA backbone. And they've got a fee-sharing switch coming soon, so you'll be able to capture a piece of the pie of all that money moving across chains. Now, before we get into the next part of the topic here, comparing different blockchains, if you want to trade the top real-world asset coins, or just Bitcoin, or meme coins, or whatever, you got yourself an account over on BitUnion, because it's a no KYC exchange, but you can trade with your privacy. No VPN necessary, available to anyone, anywhere. All you have to do is click the link, sign up, start trading. It's that simple. You can long the rips, short the dips, have a good time, trade all the coins, deep liquidity, and you can get some insane deals right now. There's a $400 deposit bonus. So that's up to $400. Basically, a 20% back on any deposits up to $2,000. You deposit $1,000, you get $200 back. You deposit $2,000, you get $400 back. And up to $2,000 in trading bonuses. That's a lot of free money, man. Check it out. Link down below. Start trading the way you're meant to, freely. So now for the settlement layer showdown. It's Ethereum versus Avalanche. I'm even going to throw in a wild card here of IOTA. Ethereum is still the king. 58% of tokenized real-world assets live on its base layer. For now, we just had a big announcement from Avalanche, actually more on that in a second. Now, if you're BlackRock, you're building on Ethereum. Simple as that. Its layer twos like ZK Think, of course, are scaling fast with another 18% of the RWA market share. They're cheap, they're compliant, they're institution approved. Even Alibaba is building an Ethereum layer 2. Its subsidiary, Ant Digital Technologies, just launched its own Ethereum layer 2 with a native stablecoin baked in. ETH tech's pretty hot, in case you haven't noticed. The message is clear. TradFi, they don't care about high chain fees, man. They want Ethereum. They like the decentralized nature, its credible neutrality, and its history. Ethereum is the safe, secure pick that's received the stamp of approval from the big boys, like BlackRock. So for now, It's Ethereum's game to lose. But here comes Avalanche. Low fees, subnets, speed. The Evergreen subnet in particular has been custom built specifically for real-world assets, meaning Avalanche is ready for the fight. It's already taken part in tokenization pilots with Citibank and JP Morgan, launched Franklin Templeton's tokenized money market fund, Benji, and it just scored a fund from Van Eck, which is dedicated to real-world asset growth, and a new announcement of nearly $250 billion of real-world assets, making, when that comes online, Avalanche suddenly one of the biggest TVL chains in the world. Avalanche is making a damn good case for being the go-to chain for tokenized finance. Don't fade it. Then there's IOTA, the dark horse. Yes, the Dino coin from 2016 is back. We made money on 2017. We're gonna make money on it again in 2025. Fresh mainnet focused specifically on real-world assets and the Move programming language with huge partnerships. IOTA is coming in hot as a dark horse contender. It's got underdog energy and a real shot if it gets it right. Ethereum might be winning now. Avalanche coming for the throne, but IOTA is coming back to prove to the market that it's far from dead. Finally, let's talk about Ondo Finance versus newcomer Plume, because this one's the product war. The infrastructure's there, the data's there. Now it's time to wrap it up and sell it to the investors. Ondo Finance wants to be the BlackRock of DeFi. They've got tokenized treasuries. They have money market funds. They have yield-generating products for both the individual and the institutional investors. They have even integrated with BlackRock's Biddle Fund, and their USDY token is gaining a lot of adoption as a high-yield stablecoin alternative. Ondo's global market platform right now is working to bring stocks and ETFs from the F and NASDAQ and the New York Stock Exchange onto the blockchain. Are you hearing that? That's crazy stuff, man. Think about how the implications and how nuts that's going to be to start bringing trillions of dollars of stocks on chain. They're not trying to disrupt TradFi over to Ondo Finance. They're syncing up with it. They're becoming symbiotic. Plus, Ondo Chain's testnet just fired off as its first transaction, a cross-chain payment using their OUSG token. Ondo is not playing small here, but if you missed Ondo, still a lot of room to grow, mind you. Plume might be the next altcoin gem you're looking for. It's the newer name in the space, building an entire layer 1 chain from scratch just for real-world assets, which is a pretty bold move. And if they pull it off, they might just eat Ondo for lunch, or at least get enough of a seat at the table to grow big and fat too. So let's look at the numbers. Ondo currently sits at a market cap of around $3 billion, whereas Plume is just around $300 million. But despite, of course, still being pre-mainnet phase, so meaning a lot of hype will still come to Plume as it starts rolling out the tech. Plume already has onboarded over $4 billion in traditional assets on chain. That's a lot of money. It's a lot of money for where they are right now. Big backers like Brevin Howard and stuff like that. So we have this baby chain handling big money before it's even fully launched. And here's the truth. The biggest RWA challenge isn't tech, it's trust. Anyone can create a tokenized asset. Very few can prove the asset behind it is real. Whoever solves that problem wins the whole damn thing. RWAs aren't just a narrative. They're the bridge to the real economy. $30 trillion coming on chain in the next 5 years, guys, and you're going to fade that? No way. No way, man. The builders are getting this right now, and they're building the rails for crypto's next trillion-dollar wave. So keep your eyes on the RWA sector. That's all I'm saying. I'm not saying you have to run out and buy the coins in this video. No, I'm giving these examples of who the leaders are, who the underdogs are, and maybe you want to go do your own research on some of this stuff. Okay? Thanks for watching.